Hello tackle traders, welcome to the Rookie Corner blog. It's been a couple of weeks since I sent you guys anything. We're at this point now where we're looking for a live trade, so we're gonna walk through our steps. We're gonna break it down into a couple of weeks here, a couple of different blogs. We're gonna go through all the steps that we need to do to throw on a live trade. Then we're gonna follow that live trade as it moves along. This week we're just gonna trade stock. We're gonna keep it nice and simple, nice and easy. We're going to determine our market bias. We're going to check our sectors. We're going to use a watch list or either a scan to find our candidates. We're then going to use the set principle, the stop, entry, and target principle to figure out where we need to go. We're going to use our tools to do that, the tools that I've shown you guys in the rookie blog in the past. That'll be our first video. Next week I'm going to throw on a video where we're going to do the position sizing. We're actually going to enter the trade, then we're going to monitor that trade, and we're going to journal the entry as well. This is basically the steps that you need to do to be a successful trader. And after we're done that, we're going to start doing different types of trades. You know, we'll do individual option trades, we'll do spreads, we'll do, you know, all of those things. But before we can learn to run, we need to learn to walk, and that's what we're doing this week. So without further ado, let's get to it. So determining market bias, we've got to look at the overall markets. We've got to see what's going on, where it's going, and how that's going to affect what kind of trade we're looking for. So first up here, we've got the S&P 500 futures. So overall, from left to right, this is a one-year chart. We're looking bullish overall, but we're in a solid pullback here, right to support at this 2,700 level. So in this particular case, at this point I'm looking at this as a bull pullback, a bullish retracement, if you will, which we talked about. That's one of our main patterns. So what we're looking for is a confirmation of a turnaround here. This could break below. It has been below there before. It is just breaking this lower trend line right now. And so we are right on this support. We need to respect that support. But you know, the reality is until this proves us wrong, until this drops below the support, this at this point looks a lot like a bullish pullback. So, you know, in this particular case, we're going to look for trades that are, you know, neutral to slightly bullish, right? We're not crazy bullish because it's not shooting to the moon, but we're not bearish either because it hasn't even broken into neutral territory yet. We've still made these higher lows, right? And we got these higher highs. So in this particular vein, if you will, we're still in a bullish neighborhood here, although cautiously so. All right. So that's kind of how we determine that. You know, we'll look at the rest of the indices to see, you know, if we're getting any different story. So again, similar, the Dow's a bit weaker. It's starting to break down now. So we can see here, I'm going to move this to the 6-month chart. This is interesting. So we can see here that this is broken down through this trend line. It's also broken down through a level of support here. It's put in a lower high, or sorry, a lower low right there. Okay, so this shows us a lot more weakness in the Dow than we had in the S&P 500. So again, this is going to give us, you know, a bit of caution, right? If this is, you know, if this is starting to break down, we want to be aware of that, right? So, you know, this is pushing us closer to neutral because now we have higher highs, but we have lower lows, right? So we've got a neutral type situation here. So again, we're probably going to be looking for neutral to slightly bullish type trades. Let's look at the other indexes and see what they give us. So the NQ. So the NQ here, again, bullish to you know, cautiously bullish. We've got a pullback here, came right down to support at the 7,000 level, kind of meandering sideways right now. We need to kind of let it play out a little bit, see if it's going up or going to continue sideways. So again, this also falls into our neutral to cautiously bullish or slightly bullish. Okay, let's look at the rut. It's been the strongest of the indexes. It looks a lot like the NASDAQ here. You know, solid run up, a decent pullback, right into kind of a neutral sideways chop here. Again, that again falls into our neutral to sideways. Our neutral to slightly bullish bias, right? So once we've determined our bias, then we can kind of move on to the next step, which is looking for a particular trade. But we need to know what the market's doing. The other thing we want to check real quick when we're looking for trades is we want to check the VIX. Okay. The VIX here had a pop a couple of days ago, showed a little bit of fear there. That's when we had that first down move. Kind of consolidated itself yesterday, and we're looking at today's candle, a little pop there. So not a ton of fear in the markets. We're still kind of in between this 15 and 20 space here, which if we averaged out, it would be pretty close to average anyway. So really what we're looking for is looking back here, this was a lot of fear. This is when the market first dropped back in February there. This year showing a little bit of fear. You can see the VIX moving up here. So this is why. This is another reason confirming why we're cautiously bullish to neutral stance. Okay. So now we have that. We're ready to go. So the question is, how do we find trades? Well, we talked about this in the other rookie blogs that we've done. We got to do a couple things. We can either scan our own watch lists for potential potential patterns that we're looking for. Typically, we've got the main four patterns: the bullish retracement, the bullish breakout, the bear retracement, and the bear breakdown. So the reality is with our market bias, we're probably looking for a bullish retracement in some kind of equity. Because it's not screaming higher, I wouldn't expect that we're going to find too many breakouts. Now, we always could, but it's probably not going to be the most prevalent trade. So what we're looking for here is probably a bullish retracement, something in the neutral vein. So what we're going to do is we're going to pop right over, and we're going to do a scan in FinBiz, and we're going to put in the parameters that are going to give us the bullish retracement look. Okay. So let's do that. So I showed you guys a screener before, but this is what you're going to want to do if you're looking for trades and you don't already have an established watch list. If you've got an established watch list that gives you opportunities, then feel free to use that. If not, then we want to come over here and we want to look at a few things. So right off the bat, this is a very decent screener, but we've got to kind of give it the right parameters if we want it to work for us. So first of all, the first thing that we always look at is volume. This goes back to the liquidity concept that we talked about in the rookie blog as well. If your stock isn't very liquid, you're going to run into a problem at some point in time. There's no question about that. So average volume, I want to be over 1 million. What that tells us is over a 3-month period, the stocks are averaging over 1 million shares traded per day. This is going to keep us out of harm's way. This means all the stocks that we're looking at, people are trading, and they're trading on a regular basis. Okay, and that's what we're looking for. We're not looking for any crazy penny stocks that can cause us trouble down the road. Okay. You can change the current volume to whatever as well. A minimum of over 750 current volume. It all comes down to that liquidity. Without it, you could be in a lot of trouble at some point. So there's industries in here, sectors. There's lots of other tabs we can play with here. I'm not really interested in that right now. We'll drill down to that at a later time. But right now we want to make sure. We're looking for stock, so I don't want anything crazy. I'm going to say under $50. I don't. We've got all sorts of traders on here. We've got traders with big accounts and small accounts. So in this particular case, being a rookie, you're probably using a smaller account. At least I would hope you are until you get some experience under your belt. So we're going to keep the price of the stock under $50. Okay. Optionable and shortable, I always put this on. If you are trading something without options, chances are it's illiquid to begin with. So just kind of a little heads up there. Country, I always default to the USA. There's lots of stocks in the US that we can use, and that's kind of just where I fall with that one. You can go into the fundamental tab here. There's a bazillion different things you can do. Because we're looking for a trade and not necessarily looking for something to own, longer term, I kind of leave this stuff alone. We talked about this in the rookie blog. We talked about the PE ratios. We talked about PEG ratios. We talked about free cash flow. Check out those technical episodes of the blog, and you'll see lots of information on all that stuff. So we've kind of gone through a bunch of these debt to equity ratios, all that kind of stuff. This is all very good stuff. But again, this is where we make our decision. Are we keeping this for a trade, or are we doing this for a long-term hold? If we're doing this for a long-term hold, you better be looking at the fundamentals. You better be looking at, the future of a company as best we can determine it. If you go back and look at those blogs, then you'll see exactly what I mean. So at this point in time, we're just going to throw on a trade, maybe a short-term stock trade that a nice pullback setup that we're looking for. So we're going to leave fundamental alone. We're going to go right to technical, which I find to be the more important of the bunch anyway. So a couple of things here right off the bat. I like to go to the average true range. Average true range is how much a stock moves over a certain period of time. In this case, it's the 14-day average true range. And I want that thing to move at least a buck over that course. So what this does is it means I've got some room to run with the stock, at least from an average standpoint, and that's gonna get rid of a few of the stocks for us. It'll take a few out anyway. So right now we're down to one of 6 pages. So there's still 6 pages of stock. You can still see there's a bunch. We don't have that kind of time to be looking through every one of these. So again, we've got to nail this down a little bit further. Okay. So if we're looking for a bullish retracement, that means it has to be bullish over the longer term, and possibly a slightly bearish to neutral pullback kind of situation. So the way we do that is we go into this performance metric, and I'm going to say I want it to be at least up for the quarter. Let's even go to the half year, up for the half year. Okay, so this tells us that it's going to be up overall for half of the year. And now we're going to look at this second performance metric, and we're going to say down for the week. Okay, so this means that it's up for the overall year, and yet it's pulling back for at least a few days, and that's really what we're looking for. Okay, if we want a bullish stock, we're going to need it to be a few things. It's going to have to be above the 200 SMA. The reason being is that's kind of the line in the sand for a lot of traders. If it's below this 200 actually not traders, sorry, I apologize. That's for investors. If it's not above this 200 simple moving average for most investors, then it's a bearish play at that point. Even for a lot of traders, we want the price to be above the 50 as well. Okay. So now we've narrowed this down to 1 page. So we've basically narrowed this down to 19 stocks that fit our criteria. So we're going to quickly look through these and see if it can't give us something. And the way we do that is we click on this little chart tab here, and now we can look for a play. Okay, so look at CF Industries here right now, left to right, pretty nice run up. We've got a little bit of a pullback here. Looks right to this support level here. That could be a candidate. Cree also looks pretty good. Semiconductor here, nice beautiful run up. Saw a little pullback, and I see a little green candle there. So we've already got a couple of candidates right out the gate that we can see. We can at least look further into. Okay, it looks like Macy's might fall into that. Plant PLNT looks like a pretty decent run as well. So we've got some candidates here. Let's look at this Cree first. So this is where we pop back to our platform, and we start doing a little bit of investigation here. Okay, so that's as simple as it is to start finding candidates. The reality is we're not looking to reinvent the wheel here. We're just looking for a trading opportunity. Okay. So, like I said, we'll start at the outer look and kind of look in. So, looking at this here, nice run up, right? Solid run in the last little while, decent pullback, right here to a reversal type candle. Okay. Now, if we can draw a little bit of support and resistance here, which we always want to do, right around this 45 level is where this thing's popped down to. And again, just drawing the best trend line that I can there. So again, support and resistance, very important. But we talked about this in the rookie blog as well. Go back to the technical analysis part of the blog, and you'll get some cool stuff on that. At this point in time, like I said, nice pullback to a doji type candle. I'm going to move this in a little bit, move this to the 6 months so we can see this, right? So nice healthy pullback. This here, what these dojis indicate is a bit of indecision from the traders. And so with this, this has given us an opportunity, if you will. Now we need this to confirm to the upside over here before we're willing to get in. But again, it comes right down to a $5 level as well, right? Popped right down to 45, the number, the $45 price point. And you can see that it came up to this point before. It put in some nice solid support there. It appears that it's going to do the same thing. So at this point, we've got ourselves a decent kind of trade here, right? So what we can do is we can start looking at some numbers. Okay, we're going to do this manually this week, and then next week I'll throw in another a way to do this. I showed you guys this before in the rookie blog, but we'll go over it next week. We'll do this manually for this time around. So let's pull up 3D Paint. So this is how you're going to want to build your trades, right? You're gonna find an opportunity, and then you're gonna put some metrics together. Okay, so we're gonna set up our stop loss, our entry, and our target. This is what we do. This is what you do every time. Like I said, we're not going to do it manually every time, but in this particular case, we're going to do it manually. Okay. So right off the bat, I'm going to start putting some numbers in here. So first thing I need to know. First thing I need to do is get it to a level where we can actually get some information in here. So right off the bat, we're looking for an entry price, right? Now, how do we get an entry price? Well, one of the ways we do that is we use 10% of an ATR above the high of the day of the previous candle. Okay, previous candle. Okay. So basically, if we go back to this Cree chart here, and we look at this indecision here, this doji type candle, we look at the high of the day. High of the day was 45.99. Okay, so this thing actually moves quite a bit. So 45.99. So then we go back to our little thing here, and we do a little bit of quick, easy math. So if we got to go 10% of an ATR above that, the ATR for this was 127, right? So that means approximately it moves 127, up or down on average over 14 days. Okay. So if you look down at the bottom left-hand corner here, you can see it says ATR 14 while there's 127. Okay. That's how we found out that information. All right. So we go back here. So now we know our ATR. We know the high of the day, high of the previous candle. Previous candle was 45.99. Okay, so if we go 10% of this above that, very simple. So we'll go, let's do this in math terms. Okay, so our entry price is going to equal 127 times 10, times 0.10 is going to equal 12.7. Okay. Well, of course, we're not going to use 12.7 cents, so this is actually going to turn out to be 0.0127. Okay, so we're going to round that to 13 cents. Okay, which where's that approximate symbol there? Which approximately 0.13 cents. Okay, is that fair? Is that fair if we do that? I think it is. So then we're looking at, we got to add this. We got to add our high of the day price, which was our 45.99, which equals looks like 46.12 to me. Okay, pretty simple. So we now have an entry price. Okay, so what this is going to do, let's go back and look at this. So we've got our entry price. We're in a good position now to enter this trade and have it be successful. Okay, so look back here. So basically what we're telling the market is that when we enter this trade, it's got to be above here, right? So it's got to be right about there somewhere. So it's got to beat this candle or we don't want in it. That's going to give us our confirmation to the upside. Okay, so now we've got to go and we've got to figure out our stop loss and where this thing can go. Okay, so our stop loss techniques, putting this all together. So let's get this, move this down here. No, we'll get rid of that one. Try this again. So text box down here. So our stop loss. So our stop loss techniques, there's a bunch of them, but in this particular case, we're going to use 50% of an ATR. So it's just one technique, 50% of the ATR below support. And the reason we're using this one is because we're sitting right on support. So why not use what the market's given us right then and there? Okay, so pretty easy here. Support is at 45, which we drew. Is at $45, which is exactly what we drew. That's the line, the support line we drew on the chart. Okay, so 50% of the ATR, we know the ATR. The ATR is still 1.27. That hasn't changed. 1.27. So do some quick math. Stop loss equals 50% of the ATR. So we're going to take the ATR 1.27. We're going to multiply that by 0.50. And that's going to equal 0.635 in that neighborhood. Okay. Again, we're going to have to do some rounding here. That's just the way things go, and there's absolutely nothing wrong with this because we're not doing this with a scalpel. We're doing this with a butcher knife. Okay. So multiply. Just checking that. So 63.5. So for argument's sake, we're going to go with 64 cents below support. Okay, so the way we do this is approximately 64% below support. Okay, and so the way we figure that out is, well, we've got 45, right, minus 0.64, pretty simple. So our stop loss is going to end up at 44.35. Okay. I think that's pretty easy to see, not too hard to figure out there. But again, this is going to make sure that we get into this trade and we protect ourselves from adverse conditions. Okay. So if we go back here and look at this, so our entry is going to be slightly right about there. Our stop loss is going to be right about there, right below support. So you can see that we're giving ourselves a little bit of room, but we're not taking any crazy chances, and we're gonna try and see where we can go with this. Okay. So the third thing we need to do for the set principle is the target here. Okay. So let's get another text box here. So now we're going to do a little bit of targeting. Okay, target. I'll call it targeting. Okay. So basically, our targeting is a couple of different things. It can be former support and resistance levels. It can be Fibonacci retracement, extensions. You can use, what else can you use for targeting? My favorite is $5 and $10 levels. We'll put the dollar sign ahead of that. $5 and $10 levels. Those are psychological levels where people tend to pay more attention to it, and so that can cause things to slow down in those types of zones. You can see that depending on the equity you're looking at. So there's all sorts of different ways to target. You're probably going to want to throw a few targets in. There's never just one, but we kind of want to look at the first one because next week's video we're going to talk about position sizing, risk reward, all that. So we need to know these numbers. Okay. So in this particular case, to do our targeting, we're going to look back and we're going to look at a couple of things here. So if we're getting in here at a 46, I'm looking at this 50 level here, and you can see that 50 was kind of a big deal here. We can draw across the tops of these particular candles here. You can see it came up, hit there, popped up above here, but none of them really closed above above the 50 level here, right? They got above it, but they didn't close. Another touch right here. So we can see 50 is very important. So is it likely that we could get back to 50? I would say so. And that's one of the ways we'll target, and that's what we'll use, okay? So in this particular case, we're using two different ways. We're using the former resistance level, and we're using the $5 level, the $5 and $10 levels, $5 and $10 levels. And so our first target would be the $50 price point for Cree. Okay. All right. So now we have three things. We have three pieces of information. We have an entry above here, we have a stop below here, and we have a reasonable target of where this can go. Okay, so we're starting to set up for a trade now. Okay, so we're going to leave this here for this week. Next week we'll do the position sizing. We'll actually enter the trade and monitor the trade as well. We'll also get into sector checking before we decide that we're actually going to get into this. We're going to look at the sector. We're going to look at the industry group. We're going to look at all of those things that we talked about in the rookie blog. So hope you enjoyed this. Like I said, stay tuned for next week. We're going to finish up this trade. We're going to enter this trade, and then we're going to continue on the process of entering further trades, different types of trades. We might even end up in a different scenario if the markets start to break. All right.